Hi guys, what is going on? In today's video we are going to discuss my next trading idea for both Bitcoin and for a super interesting looking altcoin out there right now as well. Let's dive into the charts. First off, let's start off with Bitcoin, because as you guys know, as you guys have been paying attention to my videos over the past few months, you should have longed Bitcoin over here. But for now, it is more important what's the next long setup going to be. Because guys, we know that after a deviation of the range low, technically speaking, we should be visiting the range high liquidity pool. Now, I think that I always want to use the second to highest high to take profit on my longs and the second to lowest low to take profit on my shorts. So for now, we have not met my main objective, which is this high over here. And as long as my objective around the range high has not been met yet, I remain bullish on Bitcoin. What's going to happen afterwards, we will see. But for now, I think that this is my main objective and that the range high in general is my main objective. So how are we going to position ourselves into a short? Obviously, I mean into a long. Now, by analyzing this local structure over here, there's something interesting that I'm noticing. Because what I'm noticing is that if I move to the 4-hourly time frame and I look at this local structure, is that I see a lot of fake break of structures that are engineering liquidity to the downside. We know that these fake break of structures, and why are these fake break of structures? Because we are not breaking through significant highs. Why are these not significant highs that we break through? Because the high over here, for example, did not bring us to a new low compared to this low that brought us to that high. The high over here did not bring us to a new low compared to this low that brought us to that high. So they are not significant highs to break. Still, because of these fake break of structures, there's a lot of people that are FOMOing into long and buy positions over here on this pump, for example, or on this pullback, for example. Now, where are these people going to put their stop loss? They're going to put their stop loss beneath a low that initiated the impulse that gave us that fake break of structure, which means that in my opinion, there's liquidity resting over here. Which means that in my opinion, there's liquidity resting over here. Which means that always when I look to long or when I look to short, I always want to execute my trades where other people are getting stopped out, where other people are getting wrecked. If there's no people getting stopped out or no people getting wrecked in my area of interest, it's not a valid area of interest. Why? Because I want to follow the smart money. And the smart money is always going to enter where other people have their stop loss resting. Why? Because the stop losses of those people, of those retail traders, they are providing liquidity. And smart money and the bigger players inside of these markets, which are the players that we want to follow, they need to use this liquidity in order to fill their bigger buy and sell orders. Because those orders are so big that if they want to buy, there's a whole lot of people that need to sell to them in order for them to be able to fill their buy orders. And it works obviously the same with selling. If they want to sell, there's a whole lot of people that need to be able to buy from them in order to fill their sell orders. Now, these stop losses, they are providing this exact liquidity that they need in order to accumulate their longs or distribute their shorts. Now, in this case, the liquidity, like I said, is resting beneath this low and this low in my opinion. Guys, does this mean that Bitcoin cannot go up from here towards the range high? No, it does not mean that Bitcoin cannot go up from here. There's a decent probability that Bitcoin is going to go up from here towards the range high liquidity pool. But once again, guys, as traders, our job is to always play the highest probability setups out there. If that means that we miss out on potential low probability setups that still succeed, so be it. But as a trader, I'm only willing to play the highest probability setups out there. Now, in my opinion, in this case, the highest probability setup is resting beneath this low and beneath this low. And that is pretty convenient because beneath these two lows is where we have a previous very significant supply area resting over here. This is where supply was coming into the market that led to this impulse to the downside. Look how that supply held up the price as resistance once, twice, and then we broke through it over here. And the way that we broke through that supply is very, very interesting because we broke through it with a big hour 4 bullish displacement candle over here. This bullish hour 4 fair value gap is super interesting because it exactly aligns with that previous supply area. The supply should now turn into demand, which is what we call a breaker block. If a breaker block aligns with a bullish fair value gap, it's what we call a unicorn setup. It's a high probability breaker block, which means that for now, it looks like that we have a beautiful inducement over here that is being formed above this high probability breaker block. We have this bullish hour 4 fair value gap that is confirming the high probability breaker block. And we have the quarterly level of support exactly aligning with the breaker block as well. Now, this is super interesting to me because also if we are going to count the waves right now on Bitcoin, a potential count could be wave 1, wave 2. We are in the middle of a bigger wave 3. And inside of the bigger wave 3, we should be able to count a sub-minute 5-wave structure as well. This could be potential wave 1, wave 2, wave 3, wave 4, wave 5. Inside of the bigger wave 3, count 5 waves, in which wave 1 once again also consists out of 5 smaller waves. 1, 2, 3, 4, 5. And then we are looking at a potential A, B, C correction. And that C wave might end over here. Why? Because if we are going to go from swing low to swing high with a Fibonacci retracement tool, and we switch on our Fibonacci retracement levels and we remove the 0.236 and the 0.382. Why do we remove the 0.236 and the 0.382 when we want to measure the potential target for wave 2? It is because of the fact that wave 2 usually retraces back towards at least the 0.5, but quite often also the golden pocket or the 0.786 Fibonacci level of retracement. And guys, look where the 0.5 Fibonacci level of retracement is exactly aligning. It is exactly aligning with our area of interest. Is that a coincidence? I don't think so. I think, guys, if we are going to get this kind of dip, this is a big buy opportunity before a potential reversal towards the upside. Now, what would that potential setup look like? Maybe have your entry at the top of the breaker, at the sweep of that liquidity, stop loss beneath the low of wave 2, and as our main target, the range high liquidity pool. This exactly offers an RR of 2 as well. Is it a coincidence that it exactly offers an RR of 2? I don't know. It might be, it might not be. I think that this is a beautiful potential setup that is being developed on the Bitcoin price. And if you're going to get a dip like this, I'm looking to accumulate more longs to my current swing long. The altcoin that I want to discuss, guys, is Chainlink, which is one of the stronger, if not the strongest altcoin chart out there right now when it comes to high volume and high cap altcoins. Look at this beautiful reaccumulation range, guys. Look at the sweep that we saw of the first sweep of the range low. Look how we hold the range low support afterwards, and look how we pump towards the mid-range. Guys, once again, after a deviation of the range low, we know that technically speaking, we should once again be visiting, indeed, that range high liquidity pool over here, which remains my objective for Chainlink. My gut feeling over here for Chainlink is a potential bit of an aggressive play, because I think that many people are waiting for a deeper pullback to accumulate Chainlink before sending it towards the upside, which is why I have some kind of a gut feeling that we might not get it. So we are going to go for a bit of an aggressive play over here. Guys, notice the mid-range over here. Notice how it acted as resistance, massive support, and huge resistance for this drop-off to the downside, okay? Keep that mid-range in mind. When we go to the 12-hourly time frame and we mark out this supply area over here, right? This supply that gave us this huge impulse to the downside. Look on the 4-hourly time frame at this local structure. Look how that supply provided resistance once, twice, 3 times drop off. Okay, then it provided resistance, and then we pushed above the supply. Now this push above the supply and the mid-range, this is where things are about to get interesting. Why? Because look at how we first displaced to the downside and we put in this bearish fair value gap. Look how we saw a local bullish liquidity sweep over here, and this bullish liquidity sweep of that low over here gave us this bullish impulsive structure towards the upside, and it gave us a valid shift in structure. Why? Because this high over here was a significant high to break. Why was it a significant high to break? Because it brought us to a fresh low over here compared to this low that brought us to that high. So it was a significant high to break. Bullish shift in structure. Now, what are we potentially looking at is a potential inversion over here on a 4-hourly time frame, a potential area that smart money might be rebalancing. Now, there's a lot of people that are probably going to enter a long position like this, a limit long, stop loss beneath the local low, targeting higher levels. That is not what I'm gonna do. I'm not gonna get trapped, guys. Look at the daily. We are pretty overbought. I told you guys, I kinda expect a shallow pullback, but that doesn't necessarily mean that I should simply blindly limit long. I'm going to wait for the correct confirmations according to my system. And according to my system, I always want to wait for a confirmed deviation beneath a key range level in confluence with a mitigation of an important liquidity pool. Now we have this rebalancing area, and also on the 1-hourly time frame, what are we looking at, guys? We are looking at a fake break of structure over here. Why is this a fake break of structure? Guys, this is not a lower high. This is just some consolidation and a bit of a push up. On the 15-minute time frame, it might be a valid break of structure, but I always wait for hour 1+ confirmation, which means that there's a lot of people that are breakout long in Chainlink over here. Where are they going to put their stop loss? Exactly. They're putting their stop loss beneath this low, in confluence with this low being an oh so perfect retest of that mid-range, exactly providing the liquidity that we need in order to get a valid deviation beneath the mid-range. So what I'm waiting for is a mitigation of this liquidity pool, followed by a break of structure to the upside, because once we make a fresh low, this high all of a sudden becomes significant. If we then break structure, I will be playing the higher low with my stop loss beneath the local low, and my target being the range high liquidity pool over here. And look at the beautiful RR of 3.37 that this potential long trade on Chainlink is offering us. I think that this is a beautiful high probability setup exactly according to my trading system. Now, I hope you guys enjoyed today's YouTube video. If you guys did enjoy today's video, make sure to smash up the like button. And guys, I would appreciate a subscribe to our YouTube channel. And I'll catch you guys on Friday's video. Ciao, ciao.